The Australian dollar US dollar currency pair looks very bearish. I'll show you what I see. Hi, this is Tim from TradingStrategyGuides.com. The Aussie US dollar has been pretty bullish. I think that's about to end. Today's trade pick is a bear flag on the Australian dollar US dollar currency pair, and that flag is looking kind of weak. So hang around and we'll discuss it. But first, we've got quite a few active trades to go through, and later on, today's trading maxim. It's Friday. Let's get this done and have a weekend. Remember to click the subscribe button and hit that bell so you won't miss any of these great trade setups. Let's take a look at our active trades. Tesla finally gapped up right here and hit our first target on Monday. How about that? Closed half for profit, moved the stop to break even on the remainder. Now we wait for the parabolic SAR to track up here to the break even level, and then we'll start trailing the stops. So this is about the most annoying thing that can happen. McDonald's Corp hit our target right here, and we closed half for profit, moved the stop to break even on the second half, and we were waiting for the PSAR to track up, just like I was showing you on Tesla, so that we could start trailing stops, and then bam, we get this gap down right here. Thursday morning it dropped below our stop loss and shut us down at 190.90. So we got 489 on the first half and then minus 239 on the second half. So we got a net of $2.50 on this, but still our plan was to have a bit more than that. Done with McDonald's for right now. So the US dollar Mexican peso has been retracing its former down move right here. Finally came up here, hit our stop on Thursday at 22.4281. So we got probably twice as much profit on the second half as we got on the first half, so that's kind of nice. I'll take it. Done with the US dollar Mexican for right now. And Royal Caribbean gapped up, gapped back down. Thankfully it didn't gap below our break-even stop. I hope some of you guys got profit off up here when I was talking about it the other day. In any case, it just barely touched the break-even stop down here on Thursday, so I'm out of Royal Caribbean and done with that one for right now. Canadian dollar, Japanese yen made a nice move up and retraced the whole move back down. It has not hit our break-even stop right here just yet, so we'll see how this goes. The parabolic SAR is starting to track up, so we'll probably be out of this in the next few days. The crude oil setup that I showed you on Monday triggered right here on Tuesday, pushed down and almost hit the target. It came within 15 cents of the first target, so I'm hoping that it will push down here and hit that on Friday. The Dow Jones setup I showed you a couple of weeks ago triggered on Thursday right here. I sold this at 25,165. My stop loss is 26,250. First target is 24,442. Now we wait on this one. And lastly, the Euro Canadian dollar setup I showed you last week triggered on Thursday right here. I'm in at 153.98-ish. Stop loss of 151.89. First target 155.38. And that's it for the active trades. Let's take a look at today's pick. The more often I end up taking losses on stocks that gap against me, the more I feel like trading Forex. Forex will gap some on the weekends, but it's only rarely caused me a problem with these strategies. So here's a nice bear flag on the Australian dollar US dollar currency pair. A bear flag consists of an incoming downtrend like this one here, and then an ascending parallel price channel like this. A bear flag is a bearish consolidation, so I will only take a sell trigger on this. And the pattern is confirmed by a decline in volume and volatility down here. I measure the volatility using the average true range, or ATR, which shows the average length of the last 14 candles. So here's the trade plan. We'll sell a daily candle close below the bear flag. On the breaking candle, to enter a full-size position, we want to see the volume bar reach the volume average right here. If it doesn't quite reach the average but does reach 75% of the average, I'll take a half-size position to reduce risk. You can calculate the percentage by taking this volume, dividing it by this volume average, and you should get at least 0.75. If you don't get at least 0.75, I suggest you stand aside on the trade. Stop loss is 1.5 times the ATR, and your first target is 1 times the ATR. So let's say this thing breaks, and it could break today. Let's see, it breaks and closes right here, and just ahead of the close, we'll sell at this level. On that day, you want to look down here at the ATR, multiply that by 1.5, and measure that distance above your entry, and that'll be your stop loss. Then measure 1 ATR below your entry, and that will be your first target. If after entering the trade, we get a candle that closes back up inside the bear flag, we'll take the loss right then and not wait for it to hit the stop loss. Our intention is that a breakout of the flag should be explosive and hit our target fairly quickly. If the momentum goes away, we want to shut the trade down without taking a full stop if possible. When the price hits our first target, we'll close half the position for profit and set the stop loss to break even on the remainder. We will then follow stops as price moves in our direction until the market takes us out. These two rules are the very definition of cutting your losses and letting your winners run. Typically, I do this using 2 positions. The first position has a stop loss and a take profit. That position will close automatically when the first target is hit. Second position will only have a stop loss, and that's the position that will be allowed to run. When the first target is hit, we'll have to manually move our stop loss up to break even on the second position. I will only risk about 2% of my account on each trade, and that's today's setup on the Australian dollar US dollar currency pair. Remember, my intent here is to tell you how I manage these trades. If you've already got a good trade management plan, use it. Things that work for me may not work for you. You have to understand your own mind to find the best strategies for your trading. And speaking of understanding your own mind, that's my intent for the trading maxims. The maxims help me control my emotional impulses and keep me on the straight and narrow path. A maxim is a general truth, fundamental principle, rule of conduct, or a proverbial saying. The purpose of my maxims is to motivate me to discipline in trading as well as other areas of my life. I suggest you start your own list of maxims, things that you can say to yourself while you're trading or doing life to make sure you always do the right thing. Feel free to borrow from my list. And today, another deep dive into the archive for our maxim of the day. Tim's trading maxim number 8. Your first job is protecting your trading account. Why is it so important to protect your trading account? Think this one through. If you blow out your account, and let me tell you, I've done that a few times. If you blow out your account, what are you going to use to rebuild it? I mean, if you have a day job, I suppose you can take more money out of your savings and replenish the account or whatever. But how many times are you going to be able to do that? What if you have no more savings? You should never trade with scared money. Scared money is money that goes to your mortgage or your car payment or some other important thing. So the solution is to protect your account. Never go all in. That may seem like the daring thing to do, but it's not a great plan. Properly manage your risk and protect your trading money. Remember our Australian dollar US dollar trade plan for today. We're going to sell a daily candle close below the bear flag. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the ATR, and your first target is 1 times the ATR. And remember to click the link below to the trade management video for more detail. Also remember to sign up for my free Trading Picks email list so you don't miss any of these great picks. I send out about 2 or 3 trading picks a week from all different markets, and you'll get to see them first. And the best thing is, it's free. I'll put the link below this video. Be sure to come back to Trading Strategy Guide's YouTube channel every week on Monday, Wednesday, and Friday at 3 p.m. U.S. Eastern Time for my new videos. Don't hesitate to ask any questions you may have. I'll either answer your question right in the comments or in a training video or both. And remember, the only stupid question is the unasked one. Don't miss the next installment of the Trading Education Series next Wednesday, when I'll talk about spread and commissions in currency trading. As always, thanks for watching, thanks for subscribing. Don't forget to hit the thumbs up below. Have a great week, and I'll see you on Wednesday.